Learning is fun. Yes, sir. Yes, sir. Let's go ahead and get this jumping, man. All right. So welcome to Game Plan Sunday. Today is December 20, 2020. And we're going to take a look at the markets here for this week and the past week and see what's coming down the pipeline and see how we can use that information to make some money here. So make sure you guys subscribe to wallstreetjapboys.com, to the website. Free registration right here on display. If you guys are watching this, make sure you check it out and subscribe. So let's just take a look through our news feed. This is the news feed right here on Wall Street Jap Boys. Find out what's going on. And, the market's pretty much ended on a good note last week. We had the vaccines start to roll out. So a lot of talk about the vaccines in the play. You have Moderna, you have Pfizer and all of them. Mia, what's up? We got Mia in the building. See, Mia, she already had her hands. She already had the inside scoop. They showed up with the vaccines coming out the van. You know what I'm saying? Me and Mia, we talk because, she's out there in the medical field, IT and all of that. So, the vaccine news, supposed to have, basically brought some relief to the markets. Where people are, hoping and wishing that they can get a vaccine, they'll be cured forever, never have to worry about, COVID ever again in their life. Although it doesn't work that way, but, understand it's all about confidence. It's all about, the mentality. And, as long as you can keep people, positive and, that's what the government, they're trying to do, keep people positive. So they got the vaccines popping, just jumped off this week. And so, of course, that's what we had popping for that. As I go further down the line here, but that was the big news, was the vaccines. We had cryptocurrencies that was popping. Bitcoin was, jumping out the gym. Okay, Bitcoin jumping out the gym. So a lot of talk on cryptos, and you got to get people pumped up to put money into those sectors. We had the IPOs, of course, the Airbnb, DoorDash. They were popping crazy. It's out the way. So it's a lot of information, a lot of things has been going on right here in the headlines here. So just going back here, let's see. We had weed stocks had a nice little jump for a second. That was that article right here for that. All right. So let me see here. Here go the gold and silver. Okay, I'm gonna just go back here. I dropped some links in here to these gold and silver companies here. This is where I like to get my stuff from. But these are some nice limited edition gold and silver coins. The Jesus pieces. I was trying to tell people, man, you better get your Jesus pieces. And I know people out there into the Bitcoin and stuff like that. But for me, I gotta have the physical. You feel me? I gotta be able to touch that. I need to have that, because again, if you can't touch it, then you really don't own it. If the computer shut down, your Bitcoins is done. To me, it's just a little too risky for me. I gotta have that physical. But no hate on Bitcoin. Again, we got the crypto group over here, so we got the news headlines in the crypto gang as well for those that's into crypto. But anyway, check out those Jesus pieces. The prices are really, really nice on those too. We had Justin drop off some charts in here about the fundamentals and everything. Again, we got the fundamentals group, and we'll go over that in a second. And okay, so here's the article right here about the IHS market. And I think okay, here we go. Let me just go over this real quick. Business reported that the U.S. economy lost growth momentum in December, though encouragingly continued to expand at a solid pace. The survey data added to the likelihood of the economy having continued to expand in the fourth quarter, building on the recovery seen in the third quarter. So they're saying the economy started to recover in third quarter, fourth quarter started to expand on it. However, while November had seen business buoyed by increased activity around Thanksgiving, as well as a surge in business confidence, I told you earlier, it's all about confidence. All right, so business confidence following the presidential election and encouraging vaccine news. So with the president stuff supposed to be, on ice, and then you got the vaccine news that's supposed to basically, had investors feeling more optimistic about putting on more risk. December has seen companies rein in their expectations, given the higher virus case numbers and tougher lockdown stance stances adopted in some states. Lockdowns in other countries were meanwhile reported to have hit exports. So lockdowns is hurting other countries, is what they're telling us. While vaccine developments mean some of the cloud caused by the pandemic should lift as we head through 2021, they said should. They're hoping, that's their expectations. They're expecting to basically have that the clouds to lift. So they're trying to be optimistic basically for 2021 on hopes that the vaccine will start to help people. Rising case numbers continue to darken the near-term outlook. So they're saying near-term shit is not looking good, but long-term they expect things to get better once a lot of people get vaccinated, blah, blah, blah. So this is a short-term and long-term outcome from the from the IHS market numbers here. In particular, resurgent virus numbers were cited as a key factor behind a pullback in hiring. So they're saying that people are pulling back in hiring, okay, because the numbers are going back. That's not good. Hinting that the labor market has cooled amid growing caution among employers. Other costs have meanwhile risen. So costs going up is inflationary, linked to rising raw materials. So the raw material, okay, the material that you need to make shit, those are going up. So got to understand, they go up, those prices get charged to, the manufacturers and all of that, and that gets passed on to consumers. So that means that you're getting hit with inflation, or you're going to be hit with inflation. So again, linked to rising raw material prices and supply shortages caused by the pandemic, acting as a further strain on businesses. You get just say he's going to get the vaccine. He's not scared. Hey, somebody got to be the guinea pig. So, do what you do, B. Somebody got to be the guinea pig. All right. So here go to IHS market flash. And again, you guys are hearing from the top dogs, their words right here. OK, it was showing that the IHS market numbers, the market flash service PMI business activity index slipped from 58.4 down to 55.3. So it's not bad. It's just going down. So confidence is going down. And again, we highlighted, already just read to you guys what was stated in the comments here. But again, this is on the website. So when I tell you guys do your homework, I can't do it all, but we have a resource, a great, wonderful resource, which is this website. Get in the habit of using it, checking it every single day. We put in a lot of work, but I can't catch it all. If you got some information, then you go and post it in here as well. Remember, it's not about being a star. Wall Street Jap Boys, I didn't make this PierreLawson.com. It's Wall Street Jap Boys because it's for a community, okay? So we all help each other out. I don't know it all. Nobody does, right? So just keep that in mind. I want to see you guys in here every day, at least check by, once a day or so. But it's a lot of information that comes through here. All right, so that was the IHS market numbers that we got 4 days ago. It's all timestamped. All right, and then we caught this news about the Nasdaq 100 is about to look a lot different. In its annual rebalancing schedule for the end of the week, the index will trade Monday with new components: MTCH, AEP, PTON, Ulta, Citrix, and Take Two. All right. So I was just talking about the index is rebalancing. This is just a quick update for you guys. Justin was in here. He said this is great stuff. Knowing the rebalance of an index can make or break a trade. See, that's value. All right. You don't get that on Facebook. OK, you cannot get that on Facebook. I'm telling you, this is why I don't put stuff on Facebook anymore. Not of value, because that is not the crowd for that. If they're serious, then they will be here on our website. OK. So just understand that's why we put valuable stuff here. All right. So the Feds, we had the Feds had their meetings on Tuesday and Wednesday, concluded the week with basically they didn't do anything. We didn't expect for them to do anything in the first place. This is the statement from the Fed itself right here on the website. You can see the timestamp and everything. Just go over the highlighted points here. Feds left interest rates at 0% to 0.25% and still pushing to get inflation up to and above 2%. Low oil prices has kept a lid on inflation. All right. So they're telling us because prices of oil has been lower, inflation has been tamed. So, I've been traveling like almost every week, probably, every week since November, actually. And so, gas prices, they are not at their lowest, actually. They're pretty decent, depending on where you are. I was down in Alabama. Gas was pretty cheap down there. But up here, I'm seeing gas prices going up, but not up enough to spike this inflation that they're talking about. So anyway, that's what the Fed said. Let me go down to this part. Let me open it up some here. And let's read over. All right, let's go down here to the part where it talks about the Fed. The Federal Reserve will continue to increase its holdings of Treasury securities. That means they're buying bonds by at least $80 billion per month. Okay, $80 billion per month. And of agency mortgage-backed securities, mortgages, $40 billion per month. Okay, until substantial further progress has been made toward the committee maximum employment and price stability goals. So they're claiming they're doing this until they can get things stable, right? But that's a lot. Okay, that is a whole lot that they are doing, and they're trying to keep the market afloat. So just keep that in mind. We still got the Feds that will not allow the markets to fall. Okay, so that's the story on that. Let me see what else we have here. This information here, I got this report. Representative Stuart Jones filed all three bills. So this guy passed, he filed these bills here that will make gold and silver coins legal tender in the state. And I believe this is the state of South Carolina. Yeah. Gold and silver coins minted foreign or domestic shall be legal tender, meaning legal money in the state of South Carolina under the laws of this state. No person or other entity may compel another person, et cetera, et cetera. You can just click on read more on the website to check that out. But that's good news for gold and silver. So again, gold and silver, I showed you those coins earlier. We'll go through that, a little more, but that was the move on that. Here goes some squeezes that Justin put out. So you're looking for the setups. Let me actually dial into his list. Justin has this really nice squeeze list here. He's provided for you guys right here on the site. Okay. Stock tickers, the intervals, if that's daily, weekly, or what have you. He has a description in there. You can see the industry. You can see the status, if it's in the squeeze or not. He has a signal if it's short or long, how many squeeze, how many bars, how many days that is. And he got the IV, he got the implied volatility in there. So lots of information that's being shared that you can use for your homework to find yourself some plays. Again, it's lots of opportunities. And so you got to be all over the bread like sesame seeds. You feel me? So you got to be all over it. So everybody get in. All right. Then we had the unemployment numbers. Now, this is the interesting thing because the market's did get a little rise, but the unemployment numbers, look at this. The unemployment numbers have increased. Now, you got to remember here, let me just click into it. Actually, let me read what I put in here. Unemployment rose again and is turning in the wrong direction for a healthy economy at this point. More lockdowns, more economic destruction. So people are calling for more lockdowns. People are calling for more lockdowns because of the second wave of, COVID cases. They're spiking and increasing, pretty extreme here. I actually put together this chart. I haven't even updated from Friday, but if you can see, these are the cases right here, straight from the CDC's website. And if you guys can see, the blue bars are cases, the orange bars are deaths. So this is what it looks like in comparison to cases to deaths. You guys can see cases are, out of this world there. Deaths are down there, less than 1%. And then, let me show you this. This is a breakdown when you separate the data. These are the deaths, and then these are the cases. This is what they look like isolated. Now, this is what you'll see on news. You'll see this chart, which is an amplified chart. When they basically amplify it, you can see these are the numbers for the deaths, and then these are the numbers for the cases. So they're actually, this is not an accurate map of what it looks like. But if you look at this, this should scare you. You know what I mean? If you see these orange bars are deaths and these blue ones are cases, I mean, that is freaking high. We can clearly see that this is something it is very correlated. That is really, really terrible. But that's what you get on the news, right? You'll see that and have everybody super, super scared out their brain. But this is what it looks like in reality. You see, so it's not that numbers lie, it's not that the data lies. What it is that the way that people interpret data, okay? the insights that you gather from the data, your observation, and how you interpret it. This is where people differ in analysis. Okay. So I just want to show you guys, I put that together myself straight from the data from the CDC. Anybody can do this stuff. And so when I put stuff out like that, you have some people that want to attack or what have you, but they haven't done the research. If you don't do the research, then shut the F up. I've done the work. You have not done the work. I'm just presenting the work. You can make with it as you will. But just understand this is the reality of the situation. The cases are going extremely high, but the deaths are still down here, way down here. Now, what you should see is the deaths should be super high going along with this the cases. They should be pretty close, but they're nowhere close. Okay, it stayed down here while meanwhile the cases are going up. So what I'm seeing in here is inflation of the data. I also looked at the flu numbers and they're pretty much gone. I think they said I did see that infant mortality from flu is 0. I mean, this has never happened. If you could take a look at that data, you'll see every season you go back all the years, you'll see the influenza come back every season, except for this year, it's gone. So anyway, that just tells me the numbers that we're seeing, the tests, that just because people test for it don't mean they actually have it. Those tests, they amplify the situation. So anyhow, not to get onto that, but anyway, that stuff is public. That chart is public for you guys too, if you want to check that out. But I was showing you that because that's why we're getting the lockdown talks. More cases, people are more afraid because those cases, those numbers scare people, but they don't understand how to digest the numbers, right? Because nobody's a freaking analyst. You know, people just seeing, and that's what we do. So any analyst, you got analysts that's on Wall Street that's taking a look at these numbers and plucking through them, saying the same thing that I'm saying. Dr. Michael Burry from The Big Short, follow the guy on Twitter. He says the same thing, running the data. Come on, these guys are, they're freaking geniuses, So, and I don't think I'm a genius. I'm definitely not a genius. But I put in the work, and you don't have to be a genius as long as you put in the work. Anyway, so with those lockdowns coming down, you have more unemployment. We have more job losses. Here we go. From the week ending December 12, 818,000 was the expectation. We end up getting 885,000 people filing for unemployment. So the numbers for unemployment are going in the wrong direction. Let me actually dial into this one. Here go the chart here, and we can see it's still kind of flat. It's still, down here, but it's starting to dip. Let me pull this out. You can see it's starting to come up a little bit here. Okay. And this is not a good move. Okay. We see it go up here. This will be destruction. Okay. Destruction. So they don't want to see that happen, but that's what's happening. And if you get these lockdowns, that is what you will see happen. Okay. Now, to me, again, I tell people, and this is my opinion, I can't necessarily prove it, but this is a pandemic. Okay. The plan. All right. It's not about the virus being false or whatever the case may be. I think that, again, it's all man-made. It was created, unleashed. This whole thing is a sham. But when you see job loss like this, okay, they can't have these job losses extremely high. This is grounds for revolutions. Revolutions get sparked from this kind of unemployment levels. They figured this out when they created the Federal Reserve, all this stuff back in the day, FDR and all of them, and before FDR, Hoover and all these guys, they figured this out. And so that's why they do so much intervention in the economy, trying to prevent this from happening. It comes at a cost. It comes at inflation. That's why the cost of everything in life is so high. Cost of college, cost of cars, cost of houses, everything is because the government intervention into the system. And they do that because they're trying to kick the can. As long as they kick the can down the road to the next, next generation over and over again until they can't no more, that's what they're going to do. They will not do what needs to be done. We had to filter out the malinvestments, let the economy do a correction. And once it actually corrects itself, then it can go to a nice, healthy start afterwards. But you got to feel the pain, and nobody wants to deal with that. No politician wants to deal with that because their asses would be on the line. So anyhow, this is what we're seeing here. And if they lock things down, you're going to see this shit go back up. We don't want to see that go back up. We don't want all these people to be unemployed, but that's what's happening. Okay. So those numbers are turning around. That is not good. and they're calling for more lockdowns. And again, this is not healthy for these businesses. So anyway, that was the unemployment numbers that was released on the website. Coinbase, for you crypto lovers, got this on the website. This article here about Coinbase IPO is coming, according to the SEC filings. Yeah, they have also confirmed it themselves. They're coming to the stock market game. So the crypto guys are coming to the stock market to get some of this bailout money. Okay. So we got this whole IPO, sham going on in the markets with the Fed is fronting the bill. And the guy, George Gammon, follow the guy on YouTube, check out some of his work. He put together this nice video, whiteboard video, and explaining it. Now, this stuff is so convoluted. That's why we talk about people who trade stocks. They don't understand economics. They don't understand money. They don't understand debt. They just know how to trade stocks. But trading stocks is just one thing. It's very one-sided. It's good to be overall, versed in these things. And so we go over the stock trading as well. But the big boy stuff, this is, this type of stuff right here is what's moving. But anyway, this guy, George, had his video, and he breaks down all the different levels, the layers of how money is being created from the Fed, the Treasury, and where it's going to in the financial markets, how does it never even get to the people. But these companies, these mutual funds, these pension companies, these, all these big, funds, they had to do something with this money. Anyway, they're risking a lot of capital to these, these companies like we had DoorDash, Airbnb. These companies haven't been profitable since they've been started, and they've been around for a while. DoorDash, I think we got records on DoorDash for like 2014. I could actually pull it up here in a second. But they haven't been profitable. So it doesn't make sense for people to pour all this money into these companies, and they're raising billions of dollars. And that's just going to be money that they can destroy, because they got to destroy money to market and do all this other stuff, but they're still not going to make any money. It's going to be crazy, man. I'm telling you. But anyway, so the crypto game was like, hey, they bailing people out on Wall Street. The masses don't understand all the terms and all the stuff. But this is basically a bailout. You go and do these IPOs. So Coinbase itself is going to the IPO game to get some of this Wall Street money. They're going public. So we're going to be able to trade Coinbase. Ain't that crazy? All right. So check that out. Robinhood paid $65 million fine to settle SEC charges of misleading customers. Why do all these young kids, I want to switch to red here real quick. Why all these young kids be going to Robinhood? I try not to be a hater, or, come off like I'm a hater. But, when people come all the time talking about Robinhood was, people talking up about it like, pump and dump scam or whatever. And I just told people, hey, if you're serious, use a serious broker, use a serious platform. These guys here, I mean, yeah, they messed up the game for those companies, the brokers, because they came in with zero commissions. Now, because of Robinhood's competition, we've all been able to benefit from that. So thanks to capitalism here, competition, Robinhood forced everybody to drop their money, drop their charges down, so people can trade with these very low commissions. So we're seeing more trading than ever because all the free commissions and stuff like that incentivizes people to trade more, which is good. We all benefit. But here you go, Robinhood. Yeah, a lot of kids, they sign up for it and everything. Even my sons asked me about it. I was like, listen, do as you please. But, this is the platforms that I use. You should use those as well. And I give you the reasons why we use these platforms and why we don't use platforms like Robinhood. But again, you got a lot of people that, pump up these brokerages and try to get people over. You got a lot of people that are stock trading, training, or whatever the case may be on YouTube, because everybody and their mama can do it now. And, Webull, Robinhood, all these companies there, they even come to me and ask me to use Wall Street Jack Boys to get some kind of like package thing to bring people onto their platforms, basically. Right. So you see that happen a lot, and you got to have food for the sharks. So that's what it's all about. So I tell the guppies, man, hey, guppies, y'all go sign up for Robinhood. But anyway, they're talking about misleading customers there, which is crazy. We don't want people to be misled. So hopefully they get that worked out. Gold, on the other hand, here we go. Gold. These pieces right here, I just dropped these on here so you guys can check them out. Only 999 pieces of these bad boys here, limited edition. The purest of the pure gold. You feel me? Certificate and all of that. But here's the links right there if you guys into that. And then here's some more news from Bitcoin here. Mass Mutual buying $100 million in Bitcoin. And again, listen, I had a meeting with Barron's and Grayscale, and this is all last week also. And I mean, they are promoting, trying to get people into the, to the Bitcoin game. And so I can see the institutions going to it, but then you have to ask yourself, why would they do that? So the interesting thing is, and we'll go over the charts here, but you see the dollar is losing so much value. This shit is crazy. The dollar is just, and it's going to lose more because when the Fed intervenes, you remember I was telling you about the Fed's got to try to come in and stop people from feeling pain. Well, that comes at a sacrifice. You destroy the value of the dollar, and investors have monies. Okay, these monies got to be invested, and we have the Federal Reserve suppressing interest rates. So the interest rates are held down artificially. It's not naturally. It's the Fed's holding it down to zero, and this is actually promoting and incentivizing bad behavior. It's incentivizing people getting all this debt or people taking on risk, because normally if interest rates were able to rise, then you have more money in bonds. It will make sense because it's a safer bet. You're not taking out all this risk, and you at least get some percentage on, some interest. But now you're not getting no interest, so that money has to go somewhere. Those guys don't want to hold bonds. They're not going to buy bonds. You got to be out your mind to be buying bonds right now. And so that money, and also buying a dollar. I mean, the dollar, geez, look, why would you buy a depreciating asset? That's ridiculous. And it's not going to be able to come back up. So that money is going out. It should be going over into gold and silver. We've seen that happening because gold and silver, they're actually at a really good place. But then they started chopping around. And that chopping around came from the lack of the stimulus being passed. The stimulus didn't pass yet. So therefore, we're not going to see gold and silver hit that pop until stimulus passed. Then I think that we will see gold and silver rise pretty good. So what they've been doing, they've been putting money. We're seeing money going into Bitcoin institutions, actually. So that's actually interesting. So anyway, this is an article that's in the Crypto Gang group. And then I put together this coronavirus vaccine watch list for you guys. So if you want to, profit from the companies that are facilitating this whole process of the vaccines, this watch list right here is available. It's on the website. All right. So those are the stocks. Those are those companies. And you can copy and paste this link right here. You got to do it like this. You have to go over it, copy, and then you have to load up your Thinkorswim platform. And then you have to go into the setup at the top menu. And then you hit open shared item to load it there. So you don't want to click on that link. These links you don't want to click on. You just want to copy and paste it. And therefore you'll get this watch list right here. You get that watch list. So that's good. Index funds tracking the S&P 500 have a small window today to buy nearly $80 billion worth of Tesla. So you guys know Tesla has made its introduction into the S&P 500 tomorrow. Really, really interesting because of the crazy evaluation that Tesla has. It is extremely overvalued. You know, the name of the game is to buy low, sell high. It don't matter if you're selling cocaine, you selling water, whatever you selling, you never want to buy at, these crazy highs. You want to buy at a good price. You want to get a good value for your buck. And Tesla is just not it. So anyway, but they're going into the S&P 500, and this is going to be crazy. So we'll see how the markets are going based off of that. Let me see what I put here, if I have more on that. Yeah. All right, here we go. Stocks fell Friday. Chalk that up to the addition of Tesla into the S&P 500 and the lack of fiscal stimulus at a time when stocks have been roaring higher. Tesla got a big lift as well, rising 6%. So yeah, Tesla did pop on Friday. If you guys noticed that, that was interesting. Man, they just blowing up these bubbles, I tell you. Compromise of other large cap stocks. Tesla swung wildly in the last half hour, trading falling more than 3% at one point. So it fell more than 3%. There's volatility here. The company will be added into the S&P 500 Monday and will be among the top 10, the 10 largest capitalization stocks in the index. ETFs and index mutual funds that mirror the S&P 500 will have to buy the stock, but they are 100% invested in the market. So they don't want to buy Tesla at these prices. Trust and believe me, but now they are forced to. And so we're here to see the repercussions of this happening. Simply put, these funds don't hold cash, so they can't buy Tesla unless they sell other S&P 500 stocks to raise the money that pressures the other stocks in the index. So somebody got to sell somewhere, and they are forced to buy Tesla. We'll see how that plays out, gang. All right. Speaking of value, okay, this right here, this again, you can see I posted this discussion here. I call it the Buffett value stock picks in the fundamental analysis group. So if you guys into the fundamentals, here you go. Got some great insight right here in the fundamentals group, which is right here. All you do is click that and you get in there. And so we're looking at value and growth stocks in this group. Anyway, this is the list, the same thing I showed you guys before. If you want that watch list, you have to come to the website, get this link here, drop it in your platform. You can pull up this scan here. I'll show you how I came up with the scan. These are the specs that were used to come up with the scan. If you see, these are all great things. We're looking at, market cap. We're looking at earnings per share, the EPS, the current ratio, the return on equity, net income, earnings per share growth rate, and total revenue growth rate, all of that good stuff into the fundamentals. Anyway, so that's there. You can get that watch list here and take a look at those stocks and do some homework on those stocks. Okay. Do some homework on these stocks. All right. These stocks are looking great. And then put your technical analysis on them. The fundamentals have been done for you. Now you just need to take a look at the technicals and see if you had a good buy point on these things. And just keep that in mind for your investments. You can trade them too as well. The fundamentals are great. Technicals are great. That's where you want to be. Here's another thing right here. I showed you guys this company here. I posted, this is from one of the stocks that's on that list. Okay. And I'm talking about the discount cash flow analysis that was done on here. I'll show you guys that here in a second, but it's basically saying that, this company's worth $290 in the future. Okay. So we discount that back to the present value, and we can see that it's trading at a $253% discount. Okay. So this is how you do the fundamental analysis. So anyway, I just want to show you guys that, like, if you see, here's the list right here. Okay. And in fact, what I'll do is, because I think I still got that. Let's see. Here we go. All right, cool. Bingo. Here we go. So I want to scare you guys with all these numbers and stuff like that, but I'll just show you just a little bit of what we do with fundamental analysis and stuff like that. This is a discount cash flow analysis, one of the methods that they use on Wall Street to value stocks. So you got to understand, when you're trading, you're not trading with these cowboys. I mean, you're trading institutes. Everybody's in here, So anyway, what they do, they take these stocks and we run them through these analysis. Let me go up a second, just show you real quick. I'm not going to teach you nothing. I'm just explaining to you real quick. We have these assumptions on this company. We had the financial records on the companies, which, 2019, those financial records are right here. You can see total revenue, et cetera, et cetera. You see all of that. And then we take some assumptions and we grow these numbers and forecast 2020, 2021. We forecast into the future. And then once we forecast this into the future, we get a number. And then, we can compare all of that to the, we discount it basically to get the present value of today, what it should be. And if the stock price is trading under that price, basically, then you got a good price. So anyway, that's how you get that. So, and that list, this is what came up. This stock is worth that. Current price is here. All right. So would you buy a stock that has this value of $290 for $82 today? Okay. And this is a 5-year, forecast. So it's basically in 5 years in the future, this is what this company should be worth. Would you spend $82 for a company that's worth $290? Okay. Now that is a really, really, really big forecast there, to be honest. But even if we were to cut that in half, that's still a great deal for me. Okay. So the fundamentals do the work, and then you do the rest. All right. So this is the type of stuff that we do when you're into, analysis, financial modeling, stuff like that. All right. So all of this is on the website. It's in the fundamental analysis group right here. All right. Check that out there. And then Mark came through, posted this article here for you guys. And now it starts, no free lunch. And I figured it was a matter of time. It says these tech companies want pay cuts for remote workers. So again, the whole sham is, again, I told you it's the whole sham. And how I know this is a sham, okay, is you guys remember last year when we wrote this article, when I wrote this article here, we predicted the recession to come, right? We were going through financial stress, of crazy levels before COVID hit, and then that's when everything started to shift rapidly. Excuse me. And now they're calling for this great reset because they need to break some rules to get the things done. And that's what they're doing. So even when people make forecasts like this, right? And say if it doesn't even play out the way that they said, it doesn't necessarily mean they're wrong. It's actually a little more complicated than that. A lot of these things take time to play out, if you will. But, my forecast did come into fruition, okay? But what I was expecting was that this thing would be, we will still be in this depression. But what has happened is that lots of rules have been broken from the Federal Reserve. Government and all of them have been doing everything they can to stop the market from coming down. They're prolonging the pain to keep things going. So when we got the drop in the markets, we're looking at them blowing the bubble back up, encouraging more debt. So the debt levels are even higher before, the whole COVID situation now, which is total chaos. Okay. But you see all the unemployment numbers, those things start to spike up and everything. I believe that this is all a plot to usher in full-blown socialism. I mean, this is the scenarios that I could play out in my head with universal basic income having to be at the tip of this thing. And so, with people working from home, they're talking about doing pay cuts and all that stuff. This has been part of the plan anyway. These companies, they can't grow with revenue. So again, I just showed you guys some of the stuff that we do out here. All right. Stuff like, with these financial models and stuff like that. You guys wouldn't know about this, but we get real crafty with the numbers. And I'm just a baby in the game. Okay. I'm nobody. I don't care about titles, right? But you got people that's out here that's been doing this stuff really good. Wall Street, they got the best people to cook the books. It happens. They can cook the numbers any way you could think, and they get paid to cook them numbers. Okay. They defer capital, defer expenses, all kind of stuff that they do with the financials. And so they're doing all of that. But one of the things to grow that revenue, to make it look like it's growing, is to cut expenses. So you had to cut expenses. That's the name of the game. We're in an efficiency era right now. I've been saying this. And so one of the ways to do so, you got to cut people's salaries, cut workforce. I was seeing some guys, CEOs of companies, are saying that, was it Jeff Gundlach, the Bond King, was talking about how until he started working from home, he didn't even realize he got managers that's getting paid to do nothing. He was like, why do I even need these people? What are they managing? What are you managing? You're at home now. So he said he laid off, a lot of people, right? I mean, can you blame them? They're not adding value, lay them off. So anyway, that type of stuff, I believe, will continue to happen. They will hijack this economy. Things get really bad. People are going to vote for socialism. It will come because of the pain. Nobody wants to feel that pain. They're going to say, hey, government, take care of us. Put us on that universal basic income. That is what I believe. Don't know if it's going to happen or not, but that's what I believe. So with that being said, I did catch this book. We've been talking about the Great Reset, and Klaus Schwab, this guy right here, again, they had the meeting out in Davos, Switzerland every year, the World Economic Forum. This guy is the head of the World Economic Forum. We talked about the Great Reset. I've been telling you guys about the Great Reset way before they even came out about this, because Ray Dalio was talking about the Great Reset. And y'all already know, the library is on deck. He's been calling, everything he's been saying has came into fruition and is coming. And so, and in fact, Ray Dalio just lost his son this weekend. So, my condolences to Ray Dalio. Thank you for your body of work and helping us to grow and learn. And sorry for the loss of your son in the car accident. 41, 42 years old. Terrible. But because of his great body of work, we're able to study. But he's been calling for this Great Reset. He was talking about it. Remember, I was telling you guys about how the Bible talk about the year of Jubilee, how they like the what do you call the Sabbath of all the Sabbaths? It's the Sabbath is seven days. Anyway, they say 7 times 7 is 49 years, basically. So it's 49 years, and after 49 years, the 1 year afterwards is year 50. So 50 years, you have to have a reset on the economic system itself. Anyway, all of that I learned that from Ray Dalio. Basically, he was talking about the Great Reset when I first heard it, and so then the World Economic Forum came out talking about a Great Reset. This guy here, and then he has this book talking about the Great Reset. This guy is German. He's the head of the World Economic Forum, and they're calling for the Great Reset. And they're having their meeting in 2021, and all the world leaders, presidents, kings, queens, whoever, they're all there at this meeting. Also, the technology, some of those technology gurus will be there too, because they all go hand in hand. And they're basically trying to figure out how to control the world, and they say make it a better place, but that comes at control mechanisms. So I'm actually a couple of pages into this book, not quite, finished. I'm about 40 pages into it, but this is some of the type of stuff that they talk about, and it's about them trying to hijack the economy to intervene in ways, and they won't call it socialism, but it's the same thing. And in the name of justice, in the name of all of these, heartfelt initiatives, but they don't actually provide economic analysis of any of the outcomes of those things. And we've seen this happen in the past with all these socialist revolutions. I was telling you guys about Mao Zedong of China, and Mao Zedong was, the Chinese, he had this red book called the Little Red Book. Lots of quotes in there. You've probably seen it before. Lots of wisdom. The guy was a very studied man, but he was a Marxist. He followed, Marx, and he wanted to, be like the Soviets. Communism was a big thing at this time. And, the West, which is America, we were blowing up. We were doing great. Everybody was getting everything they need from America. We were producing. America was great, at this time, basically. And, they wanted to compete, right? But this guy Mao Zedong, when he came to power, what he did is he hijacked the economy of China, and he tried to basically copy what America was doing with steel. So, we had a great steel industry boom, and so he was seeing that, and he was like, "Well, we could do that here in China." So he had everybody to go get all the steel they can get. They was taking shit in their houses, in every place they can, all the people, and taking the steel and melting it down and working it. And he had them all taking care of them. They had universal basic income. They had the healthcare, free healthcare. They had all this stuff. The doctors was fixing people up in the streets and stuff. So for some people, you can see, hey, they were happy about it. I was like, oh, we was happy. We had free healthcare back then and blah, 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 until the people started dying of famine. Okay. So estimates are from 30 million to 100 million people died from this guy just saying, hey, this is what we're going to do. But you can't just do that in the market. See, the market tells entrepreneurs what they should be making. Okay. The market sends signals to entrepreneurs because that's what people want. So it's all about people, what your wants are, your demands. And once we figure those things out, then you get competition with people trying to make that better and better and better. And so it's a natural mechanism. Think about it like it's your body. The economy itself is a natural ecosystem. It doesn't need government. It doesn't need a Federal Reserve. It has gold. Gold does, that. So that's why they took everything off the gold standard and implemented the Federal Reserve so they could keep kicking the can down the road and instead of having to deal with what we need to deal with, right? So that we can clean the bad malinvestments out and have a great restart. And so what they're calling for is a rebuild. What they call it? They're calling a new type of capitalism. Basically, they're calling for we need a new capitalism. But the problem is we never actually had a real capitalism society because we have so much intervention. So we get corporate socialism, where these corporations have been getting a lot of stuff. And so then you can see why people choose to be Marxist or socialist, because they're seeing all the greed in corporate America, and the government helps that to occur. And so the problem is that you have the government that has power to be able to do so. So you have to take that power from the government so that you can have things running the way that it needs to. You need competition. All right. Competition is what keeps prices low. It doesn't matter what it is. If you got competition, prices will always be low. So you need competition. Society benefits from that as a whole. Business will come, business will go. That's the way that it works. And um, yeah. So, and it's not about socialist hate, but check this out. And I told you guys about Ludwig von Mises. If you don't know who he is, you need to know who he is. Add his book, add all of his books to your library. But this is one of my favorite books by him. It's not so heavy as his other books are. And so he talked and described these things. He's talked about them in great details from the early 1900s, up until he died, basically. But they call him Mises Christ because he knows a lot of things, right? But he's basically the savior of the Austrian economic school. And so that's what I've been studying, Austrian economics. Really good stuff. So get this guy a book, but he describes everything that's happening now. And he calls out all the things that they're trying to do with this whole thing, the Great Reset and all of that. He talks about it way back then. So you had to study history and stop listening to everything you see on the news. And we have to read. We have to get into a place where people are studying. And so you got lots of people that's doing the studying for you. All you got to do is show up to class and listen, take you some notes. It doesn't mean that anybody knows all, but take all the information and use that information to your advantage. And so when you're seeing things like them trying to create a new society, well, the thing is that if it's not natural, it creates distortions in the economy. That's what I was trying to tell you, is that economizing men, entrepreneurs, we get signals from the market, profit and loss. When you see your stocks, you making profit, you know what you're doing good. So you keep doing that. It incentivizes you. So the profit loss system, it encourages that good behavior. And so then when you get the losses, to stop doing whatever you're doing because that's not working. You need to switch. So that's what entrepreneurs are doing. And then they're going to what works. And so, and that keeps going in the system. It works on itself. And it creates productivity. Because of high productivity, you have the quality of life and everything to rise for everybody in the system. Okay. But what happens is, like what Mao Zedong did, is that he hijacked the economy, had everybody doing still. So who was growing the food? Who was doing agriculture? Nobody. So people starved and died to death. And so we're seeing bits and pieces of that happening now. Where the government is controlling who can stay open, who has to shut down, right? You can't get alcohol at the certain levels, blah, blah, blah. I mean, what does this have to do with COVID? It doesn't make any sense at all, but I'll leave it to you guys to make your own assessment on that. So you have that happening. And then what you see happening is that the biggest companies, they're getting even bigger. Amazon isn't getting smaller. Walmart isn't getting any smaller. These are the ones who stay in business. So they're making the money. They're incentivized by the government and all these rules. And obviously you can exploit this and make money in the stock market, of course. But that's what's actually happening on the economy, which the stock market is not the economy. We just showed you over 800,000 people a week filing for unemployment. Meanwhile, stock record hitting record new highs. But that's why I tell people, hey, you should get involved in this section over here, because pretty much everything that you do in life is somewhere tied to the stock market, whether it's real estate, whether you got a job, you got a pension, you got 401k, you need to be aware of what's going on. And also you can make yourself some money. So anyway, not to talk your head off about that, but I did get that book. I'm going to finish reading that because I want to hear from Klaus himself. I have heard other people that talked about and did analysis of this work that he did. And it sounds straight up just like my man Mises called out ever since the 1918 to the 30s to the 40s and the 50s. He wrote this book in 57, but he has a book called Socialism, his work, his reputation of socialism, all those things. The socialists didn't even know they had a problem where they couldn't calculate prices until Mises bought it up. And they've been spending years trying to figure that out. And what Mises is saying, that we get prices that y'all see in the stock market, prices, everything, prices is like, the DNA of everything. Where do you get prices from? And they could not figure out how to do that until Mises called it out. And he's like, they would never be able to do so. It's too many variables that it takes that happens in the natural process that they want to do. And this is why you have technology that is, now that we have all this technology, they have more confidence that they can do it better than back then. So these guys, this guy right here, he has so many PhDs in economics, technology, and stuff like that. That's why you got the Mark Zuckerbergs, the Elon Musk, and all these intellectuals in technology. They are getting all these crazy contracts because they're going to help the government facilitate everything. So understand That's what's happening. I just want to give you guys that information. So, and I would love to hear you guys' feedback on that, whether you agree with me or you disagree with me. I see Jeffrey Freeman says, while the socialism hate, I should check those books out. You should check those books out, my man. The history is there for everybody to study. And definitely. And you said you're in, I don't know where he said he's at. I know he said he's getting the vaccine, but yeah, check those books out. Definitely check those books out, my man. So anyway, I'm just here to to give you guys the information. And this right here was just posted. Now the stock market rally awaits passage of a stimulus deal. So we got the stimulus deal situation. We're talking about that. Senate Majority Leader Mitch McConnell on Sunday afternoon. This is today. Okay, they had a bipartisan breakthrough announcing that the 4 leaders of the Senate and the House finalized an agreement. So I told you they were going to try to rush to get this bill out on a $900 billion stimulus deal. McConnell said it extends extra jobless benefits, provides another round of direct checks to adult Americans, more funding for small business loans, aid to airlines and schools, and more. McConnell said a stimulus deal vote will happen as promptly as possible, but there were reports that it will be pushed back to at least Monday. On Saturday night, lawmakers resolved the last notable hurdle to the $900 billion stimulus package. All right, so you guys already see what time it is. The stimulus deal is likely to be combined a $1.4 trillion spending deal. Okay, so this is, let me see, with the economic recovery stalling amid coronavirus cases and COVID restrictions, and on January 5th, Georgia Senate runoffs looming, there have been strong reasons to reach a stimulus deal. Lawmakers also would like to get out of town for the holidays. So that's why I say they're going to try to rush this thing out. I was telling Justin in the group early this week, we was in the chat room. So make sure you guys check out the chat room down here. So, we're in the chat room. We got it popping right up here in the chat. But basically, we was talking about that, and I was telling him, no, they're going to try to get this thing out by any means necessary, no matter what. Even though they don't agree to the terms of this bill, they think it's too small. The Democrats think it's too small, but they'll pass another one. If Biden truly does take the presidency, then they'll pass another bill. So you'll get 2 spending bills. Now, all this spending is inflationary. And so what is the hedge for inflation, guys? You should know this by now. How do you hedge against inflation? You have to have gold. All right. So that's the story on that. That's what we've been talking about. Them getting this out. Once this gets out, the market is going to do what it do. So with that being said, let's take a look at the charts. Bingo. Here go Tesla right here. Just taking a look at Tesla. We talk about that big old jump right there. With everybody speculating on Tesla. Tesla is extremely overbought. And so because it's from this swing high, let me show you guys this real quick. All right, so when we do the analysis here, from this swing high to that low, we've already breached the 1618 target, but then I had to go to a higher target of the 2618 in case this thing decides to explode even further. You see all the volume spiked on this move here. But it doesn't mean it's going to continue to go higher, because typically what we'll see with Tesla, after it has those high volume spikes, you see that the stock comes down. And so that may be a good shorting opportunity. We can see the spike that moved here, the price dropped down there. All right, this move here, price dropped down there. So with it leaping up this high off of, hype, we could see Tesla, coming down after that. But we'll see. I'm not the one to mess around with Tesla no more, because, short Tesla is crazy. There's no logical sense in trading Tesla. So you just, make your trade and do your gamble however you choose. But I just want to show you guys that, because Tesla will be the talk. It is the talk of everything right now. Been is added to the S&P 500. All right, so we're seeing the futures are trading negative so far. And all right, so we got the futures up here. And taking a look at the charts. How much time I got? Okay, so I'm running close on time. But we can see the ES is tapping up against this resistance zone. We're going to go back to yellow. Excuse me. But yeah, so if we take a look from this swing high to that swing low, we have this resistance line, and it hasn't been able to quite crack it. It hit new highs, but it's pushing up against that. And you can see that that's a clear level of resistance. Don't know what to make of it yet. But if I look at my stochastics tool, we're seeing that it's overbought and it got some arrows coming down on it. So we'll see how that plays out though. But with a stimulus package, passing, maybe this thing will pierce through. Who knows? Markets are distorted now because of that intervention stuff is distorting all kind of things. And so it makes it harder to make analysis in this. I'll show you guys the ES, that's the S&P 500. Let's take a look at the Nasdaq. Okay, Nasdaq off of those new highs, up against that 13,000 target right up here. And so there you have it. It could blow through, who knows? But 13,000 target is so close. Because it's so close, it's hard for me to believe that it will not touch that target. So I believe that it will have to touch that target. All right. And because of that, I know I'm close on time for you guys here. Let me just show you gold real quick. Okay. Equities is down right now. Gold and silver is up right now. So here's gold. We caught gold down. Let's go ahead and let's follow the trend of gold. Gold came down to the 100, came up, got rejected up here at the 618, fell down to the 200. That's a key level. Came back up, got sandwiched with the 100, smacked back to the 200. Came back up, broke through the 100. Okay. And so that actually looks like a double bottom setup. That's what it looks like. Can have at least a target of 1950 right up here, pretty much right up there on this target for gold. It could go further. Okay. So I am bullish gold, and the story behind that is stimulus package being passed. All right. Let's also take a look at silver. And silver has an even better setup here than gold. We can see silver has another kind of setup that looks very similar. All right. Hit that 100. Okay. Came back, came through a little bit and then popped back up, and it's coming back up here. So you're looking at a very similar setup as well. So, it is in the overbought territory up here, but it could play around in that territory a little longer. So stimulus get passed. I don't think that they will even care. I think that we'll get up at least around this zone here. All right. And we've been talking about Amazon. All right, so we got bullish trend alignments here on Amazon. What I want to do is take you to the weekly chart on Amazon. And so we got this weekly chart here. And on this weekly chart, what do you see? Well, we're not in overbought territory. We're at a good spot. All right, just taking a look at that. All right, just under here. Okay, we got a buy trigger that's right in there. This is the weekly chart, by the way. We got a squeeze, nice squeeze set up in here. And, we got like a diamond setup here. Okay, bingo. That is a bullish signal. That's a bullish pattern, the diamond. So it's got a squeeze in here. Take a look at Amazon. Again, we talk about those big companies, while they're shutting things down, it causes distortions. People would normally go in stores and go shop. Now they're, switching their behavior in this social experiment. So more people are shopping at Amazon than would have otherwise if, this whole pandemic wasn't playing out. So I believe that Amazon will continue to benefit. Now, the price of Amazon is extremely high, but I believe they will continue to make their money. So that's a weekly squeeze. We dial in, we have a daily squeeze on top of that. So we got a squeeze within a squeeze, trend popping up as well. That 100, you see that floor has been very, very steady. Buy trigger, that's right there. And so I have reason to believe that Amazon will be able to get a nice pop. And I believe that we can get at least to the 618 up here. And this may be enough move, enough money for you right here with a longer term target of close to the 3,800. Amazon, I am bullish. That squeeze has been building, and you know, that is ready for some moves. So positive movement in the market. I'll be looking at Amazon. Also, Microsoft. Also be looking at Microsoft as well. Got about a $230 target on Microsoft right up here. Same thing, down right here to the 100. And then we got a buy trigger that's right up in there. All right, squeeze. And again, this is the daily chart. Let me go back to the weekly. We have a bigger squeeze here. Okay, so we got a squeeze within a squeeze play on these two here. Same setup that we saw in Amazon. That whole that diamond play that you got there. So this thing should be able to lift off with the squeeze, blast off. I think we would go through even that 230 target. I think we'll get up to the 127. That squeeze fire off, buy trigger here as well. All right. And I am over my time. So I'll take 3 from you guys and then we'll call it a night. What you guys want to take a look at here? Pepsi. All right. So Dustin got Pepsi. That squeeze is fired off. That weekly squeeze is fired off. So we should get some extension in here. Not too far from its past recent highs. It's right there. It's actually it's so close that I believe it's too close for them to not take out that target. Let's dial in on a daily. All right. Looks like it's been a while since I charted that. All right. So let's go to from here to here. All right. So yeah, we can see that resistance is right there. It's right here on that resistance. And it's got a squeeze in here. These are squeezes. So I know they're different colors for you guys. Yeah, those are squeezes. And take a look at the stochastics, how it came down and is ripping back up like that on the fast stochastics. And then we got a buy trigger in here. So with that setup in here, I believe that we can clear through this resistance and break that that record high, that 147. We're right here. We're stone's throw away from it. And normally when the market is that close, we'll typically see that they're going to break it. So yeah, I think that's definitely going to happen. If not tomorrow. In fact, it's already working on its way to do so. If we take a look here at the price that is trading at right now, we can see the bid and the ask is already above 147. Price last traded at 146. So tomorrow you'll see this thing going up. All right, at the hours market, price is already headed up. So that looks good, Dustin. USCR. So the ready aim fire tool, Brandon, in the class on the website, I'll show you guys an alternative for it. Some of the tools you see that I use, you can buy them if you want to buy it from one of my mentors. They actually sell this tool. It's probably about $600 last time I checked. I don't know where they had this thing at nowadays, but you don't actually need that. The setup that I have, you can use for free. That does the same thing pretty much. And so if you're interested in that, just let me know. Okay, hit me up on the site and I'll let you know, whatever you want. So if you want to buy the indicator, you can. If you want, to build the free one, which is in our class on the technical analysis class. And I'll show you guys that here in a second, where you can actually get use a tool the same way that does the same thing. This US concrete, I don't know, this is a huge volume spike in this thing. You got to give me the story on this one, Ron. I don't think the Fibonacci is going to help us with this. Let me actually go down to a higher, lower squeeze on here. Yeah, I don't like any of those here. So I would like to know the story on this concrete. What's happening with the concrete? It's got a huge spike in here on volume. That's the point of interest. It's got a buy trigger in here. As far as what I'm looking at, about $50 target on this thing. Squeezes in play, stochastic shifting, trend shifting. So it's got some good things on here. Concrete. That's an interesting situation here. Yeah. So, okay, if I go on a weekly, as we can see, my Fibonacci target extension is right here near those highs. 50 is a whole number, so that's why I call that out. That 200 moving average resistance is right here, that 50. So we can see that, it could, come right here to that line to be around 50 by the time it gets there. So yeah, that's a counter trend trade right there. Okay, bounced off that floor and now it's coming back up. So it's a bounce play off the weekly. What else we got? WSC. All right, there's another squeeze. Will Scott Mobile. Let's see where we are. Bingo, from that high to that low. We could see the 127 extension was tagged and the stock immediately got rejected after it was tagged right up here, hit that line. It looks as if the stock will try to test that line again, but because it has that squeeze on there, uptrend, buy triggers, volume is starting to come up some. All right. I believe that if the squeeze fires off, we'll be able to blow through this target, the 127 target here. And we should be able to get up to that target there to about $28. All right. Let me see. Keith, my man, Keith, what's good? You see that movie Tenet yet? The Tenet movie? Man, I went to the movie theaters and caught that. That was crazy. And basically, I got it on the Xbox on the console, caught it with the family again. Feel like watching it again. That's the movie of the year. I'm telling y'all, Christopher Nolan is a genius. So if you haven't seen the movie Tenet, man, make sure you see it. All right. This is a penny stock. I don't know what's going on with this stock here. Looks like a pump and dump. The whole fan. Okay, yeah, you see the fan watched it. Yeah, it looks like they pumped this thing up to here and now it's falling down. So yeah, this is yeah, you're supposed to have been in this play back here. And then when it popped off, you got your residuals and then sell off. You got to feed the sharks. And I believe, what is this? Okay, another penny stock, some medicine company. The same thing on this one. The momentum has died off in this one as well. Extremely overbought. So normally you get those overboughts. Okay, you're supposed to have been in and out of that there, and looks like it's losing momentum. So maybe another pump and dump. Again, I don't specialize in penny stocks, but that's what they typically do. We try to focus on the blue chips if you can. Like the fundamentals I was just showing you guys. All right. And that's another one, Brandon. Okay. Yeah, another penny stock. Again, I don't know if my work will really work with the penny stock stuff. It is extremely oversold. I don't like the chart itself. So I would stay away from that one. And then this one here is a counter trend setup. It's a little better. Therapeutics, these pharma companies, they are very, very volatile and they are normally low liquidity. You can really get yourself into a trap because those trades are hard to get out of when you're dealing with illiquid companies. So for me, that is a no. I have nothing for that. And I believe my man Jeff asked about this company, IIPR. This was a nice play back in this range. It looks like I charted a while back. Let me see those levels. Okay. So yeah, that's crazy. Let me go back here to this here, get some new levels. All right. So it formed that flag there, and that flag was a bullish play, as you obviously can see. Bingo. All right. And Bingo. All right. I mean, that's a crazy jump. You know, it's straight up. Let me see. All right. So we come in here. And so like at this point, because it's so high, this may be able to hit 200. I don't know if it's ready to hit 200 yet. What we typically will see is that it will come back to its mean. We're seeing it start to gas for a little air to take a breather because it had a nice run. And so you can see this flag form right here, had a nice pump up. But if you take a look closely, let me see if I can drill in a little closer for you. Yeah, because the price is so far from the mean, this is the mean, this little line here. Price normally trades close to that line. And when price gets away from that line, this is normally a good place to short because it has to come back to the mean. All right. So this is not a good entry here, but it was a good play when it formed that flag right here where we got that buy trigger that's down in here. That buy trigger was the time that you should have been in this play. And right now you should be profit taking right now. So I don't know if you're already in that trade, Jeffrey, but if you're in that trade, you're at a good profit taking zone. All right. He said a magic mushroom plays. Yeah, man. So yeah, with that being said, I was showing you guys, you know, a lot of good information here. We're showing you guys the fundamental analysis and stuff like that. So I encourage you guys to continue to do the homework and all of that. Right here on the website, you can go to the different groups. It's a lot of things you can do on the website, of course, arrange things the way that you need for your research. Whatever you learn, share it with the community. This is all about building community, of course. And we can see the most, you know, popular groups and things like that. Recently active, most members, newly created, all of that. So we can see these groups are all the groups we got here: the fundamentals, the legends and gurus, crypto gang, IPOs, futures, forex, gold and silver, technical analysis. So get familiar with those and start to add to the discussion. You have questions. The only way you can learn is if you ask questions, and you never know who's in here, who's looking, who can help you out with, you know, whatever you're researching or trying to do, or maybe you got some valuable insight. Definitely share it. I welcome you guys. Also, don't forget the Think Script group for you guys that like those fly indicators. I know Brandon was asking about some fly indicators where myself and Justin, we've posted, you know, great scripting, coding for our platforms to get some custom indicators in the class, which is on the website. Some of those indicators are in the class also. Some of it is a part of the courses. So when you're on the website, you go through the courses. If you haven't been through the new course, go through the new courses. If you learned from me back in 2017, 2018, or how long ago, this is all updated, and it's so much more value, so much more. Well, it's so much, you know, for you that's basically crunched down to respect your time in a way that you can control that whole process a whole lot better, you know, basically. So you guys can see that, you know, we go into, let's say, like the technical analysis class, and let's go through. I'm gonna just show you guys one, show you the Fibonacci class real quick. And so you guys can actually see the classes. They pick up where you left off at. All right. So you can pick up where you left off at. You can see your progression and all of that. You can jump into other classes if you need to go back to relearn something. At the end of the each course section, there are quizzes so that you can test your information out to see if you learned it. Oh, and by the way, the black, that's because we're in night mode. So while you're studying, you know, I like to use that night mode to kind of, you know, clear things out for me. All right. So you get all of that right in the classroom, but you can switch it to the white if you like the light mode or what have you. That works as well. And then you just click on the, you know, the classes here. You'll see that this class right here, this is one of the longer classes. It's 40 minutes, probably the longest class on here. All right, gang. So in this class, we're going to cover Fibonacci analysis. All right. And so you can see all of that right there. And, you know, we go through teaching you guys all of that. And then here are references and things that you can download for yourself right in there. So Yeah, that's an auto Fibonacci indicator. You guys can load that up on your platform. Just make sure you just copy and paste that in there. So anyway, I just want to show you guys some of the cool things that we got here on the website. Got it working. Make sure you subscribe if you haven't subscribed at wallstreetjackboys.com. And hey, make sure you guys invite somebody over. You feel me? But I'm in the chat room daily, and stop by the chat room, say hello to the gang. You know how we do. But that being said, you guys have a good night, and we'll catch up in the markets tomorrow. Peace.